Hi everyone, my name is Ina Volovic and welcome back to my channel. I am an IRS enrolled agent who helps entrepreneurs, investors, and self-employed professionals save thousands of dollars in taxes using strategies most people don't even know exist. And today we're diving into one of the hottest topics of 2025, how you can write off 100% of a new vehicle using updated bonus depreciation rules. This is a game changer. Starting January 19th, 2025, bonus depreciation is officially back 100%. That means if you buy a qualifying vehicle, even if it is used, you could potentially deduct the full purchase price on your taxes. Yes, that would mean tens of thousands of dollars in tax savings in one single year. But as always, with the IRS, there are rules. And you need to understand those rules before you make a big purchase. So grab a notebook because I'm going to walk you through step by step how it works and I'll explain it in plain English. And by the end of this video, you'll know exactly what to do and how to take advantage of this powerful strategy. If you're already thinking about buying a new vehicle for business, hit the like button, subscribe, and save this video. And today we're diving into one of the hottest tax topics of 2025. Because I promise you, you'll want to revisit it when tax season comes around. Now let's dive into it. Step 1. You must have a trader business. This deduction is not for everyone. You need to have a legitimate business activity. That doesn't mean you need an LLC or corporation. Even self-employment income counts. So if you drive for Uber, work in a real estate, run a side hustle, or operate as an independent contractor, you qualify as self-employed. And that's exactly who this tax rule was designated for. Step 2. The vehicle must weigh over 6,000 pounds. This is the famous 6,000 pound rule. Why? Because vehicles under that weight are considered passenger cars, and IRS limits your deduction on passenger cars to about $20,000. Not bad, but nowhere close to 100%. When the vehicle weighs over 6,000 pounds, it's no longer capped as a passenger vehicle. This is where 100% bonus depreciation comes into play. Here's an example. If you buy a $60,000 passenger car, you might only deduct $20,000. But if you buy a $60,000 SUV that weighs more than 6,000 pounds, you can deduct the entire $60,000 in 1 year. At the top tax bracket, that's more than $22,000 saved in taxes. And yes, even if you finance the vehicle, you still can deduct the full purchase price. Step 3. You must use vehicle more than 50% for business. If you use your vehicle mostly for personal reasons, you don't qualify for the full deduction. The IRS looks closely at the business mileage. This includes driving to client meetings, job sites, offices, properties, supplies, and yet even business lunches, basically going from one business location to another. A realtor might use their SUV to show properties. Landscaper might use their truck to haul equipment. Whatever your profession, you must prove that more than half of your driving was for business. And yes, the IRS can ask you to prove it. That is why I recommend using mileage tracking app. If you're ever audited, having a mileage log can save you from losing the deduction. Step 4. Choose the right deduction method. There are 2 ways to deduct a vehicle. The first one is standard mileage method. In 2025, that's 70 cents per mile. And the second one is actual expense method. This is where you deduct gas, insurance, repairs, plus the depreciation. Here's the kicker. You can only use 100% bonus depreciation with the actual expense method. So if you want the big write-off, you cannot use the standard mileage method. Let's run through an example. You buy a $60,000 SUV that weighs over 6,000 pounds. You use it fully for business, and you have $10,000 in additional expenses like gas, insurance. With the actual expense method, you could write off $70,000 in the first year. That is massive. Step 5. Watch out for depreciation recapture. This is the part nobody likes to talk about, but it's important. Let's say you write off 100% of your vehicle this year. 3 years later, you sell it for $30,000. That $30,000 doesn't just disappear. It becomes taxable income again under depreciation recapture rule. The IRS says if you got a huge deduction up front, you don't also get to pocket all the sales proceeds tax-free later. The same thing happens if your business use drops below 50% in future years. That's why planning with a tax expert before you buy a vehicle also is important. Now, let's go a little deeper. Because I know a lot of my audience here are business owners who want to maximize every deduction. What about leasing the vehicle? You don't get a bonus depreciation on a lease, but you can still deduct the business portion of your lease payments and your operating expenses. That can still be a smart option if you prefer leasing over buying. What about electric vehicles? Here's where it gets interesting. If your EV weighs over 6,000 pounds, you can still qualify for bonus depreciation. On top of that, you may also qualify for federal EV credits depending on the model and where it's manufactured. That means you could combine a tax credit with 100% deduction, which is incredibly powerful. What about luxury cars? If the vehicle is under 6,000 pounds, remember, you're capped at around $20,000 in year 1. So if your goal is full write-off, you want to stick to a heavier vehicle. One more important detail: timing matters. Bonus depreciation is back at 100% as of January 19th, 2025. If you bought a vehicle earlier in the year, you may not get the full benefit unless you place it in service after that date. So make sure your paperwork and delivery dates line up with the IRS rule. Let's recap these steps. 1. You need a trade or business. 2. The vehicle must be over 6,000 pounds. 3. You must use more than 50% for the business. 4. You must use actual expense method to claim bonus depreciation. 5. You need to plan depreciation recapture in future. Follow these rules and buying a new business vehicle could be one of the smartest tax moves you can make in 2025. And when you combine bonus depreciation with smart choices, business structures, and vehicle strategies, the savings go on even further. If you found this video helpful, give it a thumbs up, share it with someone who's thinking about buying a vehicle, and subscribe for more strategies like this one. See you in the next one.